Unlocking the secret to building wealth. This is one of the best strategies within real estate that anybody who wants to get started and take their business to the next level and create that wealth that most people talk about, generational wealth, passive income, residual income, and everything in between. And it's what's known commonly as the BRRRR method. The BRRRR method for real estate investing. And what does BRRRR stand for? The BRRRR method is simply the process of buying a house below market value that needs to be fixed up, renovating it, renting it out, refinancing, and repeat it. Okay, so let me repeat that. The BRRRR method stands for buy, renovate, rent, refinance, repeat. A lot of you know me for being a full-time real estate investor for over the past 23 years. And what I love to do with the BRRRR method is to actually rent my houses on Airbnb. That's just one of the strategies that I love to do. It does make things a little bit more complicated, a little bit different, a little bit more active than passive, but it's very rewarding as well. So the BRRRR method, like I said, is the real estate investing strategy that has gained major popularity in recent years, which the acronym again stands for buy, renovate, rent, refinance, repeat. The goal of this method is to acquire properties, again, like I said, acquire rental properties that generate income and increase in value over time while minimizing the amount of cash that's invested or stuck in that property. And we do that by breaking it down step by step in this article, in this newsletter for you, and in this video, okay? So the first step is that we're gonna buy the property. We're gonna find property that is undervalued, right? Property below market value, preferably a property that's off market, right? Because once a house is listed, the whole world knows about it, and by then it's too late. So what we're looking for is properties below market value that are off market. And this can be done through generating motivated seller leads, because great deals don't just come to you. You have to go to them or get them to come to you by doing the outbound marketing and generating those leads, right? That comes from doing mailing campaigns to people who are in a distressed situation. They're behind on payments, or they're going through a divorce, or they have a vacant house, or they're tired landlords, or they just evicted a tenant, right? Or they're a probate case where somebody in the family just passed away and they're inheriting that property that they now need to sell. These are all opportunities to find sellers who need to sell or want to sell, but they don't have the luxury of waiting 3 to 6 months to list, market, and sell their house with a real estate agent while they continue to make payments on the house, or they need to renovate the house themselves, right? So the property should also be in a desirable location with the potential for appreciation. Some markets in the country, I understand, they don't really go up in value a whole lot. Maybe they're conservative 3 to 5% per year, which is great. We're going to buy our properties below market value. And what's often said in real estate is that we make our money when we buy, we get paid when we sell, right? So what that means is that we make our money by buying houses below market value because of the distressed property that needs to be renovated to be brought up to today's standards. A lot of times these houses haven't been updated or renovated in years. So it makes sense for the seller to sell it below market. And then we get to capitalize on the appreciation from doing the renovation ourselves, okay? Once we rehab, that's step 2, right? We're gonna buy the house below market, that's the first B, and then we're gonna we're gonna renovate that property. So once the property is renovated, the next step is to renovate that property and rehab that house after we've purchased it. This could include cosmetic updates. This could include just doing paint and flooring. A lot of times we get houses below market value that just needs the quick paint and flooring. And we just did a house over in Mont Bellevue that we picked up subject to by taking over the payments. And literally all it needed was a paint touch-ups, carpet cleaning, and a little bit of repairs, right? So that house was ready to go pretty quickly. Once we renovate it and do the cosmetic updates, or even if it's an extensive renovation, such as opening up walls to give the open concept, taking out load-bearing walls and putting beams in to give an open concept and things like that we love to do, or adding square footage. A lot of times we will add square footage by converting a garage into a big master bedroom, or we'll change a half bath into a full bath. All these different things that we can do to add value to the property, right? Kitchen renovations, adding square footage, adding bathrooms. These are all things that give you a really great return on investment, which means that it's going to give you a 3 to 5 times multiple, right? So if I do a $5,000 renovation on a kitchen, I expect to get a $15,000 to $25,000 increase in value for doing that renovation, or the same thing with adding a bathroom. The next thing that we do after we've renovated the property and gotten it ready to market is that we're going to rent that property out. And most traditional people doing the BRRRR method, they're going to do buy, renovate, rent to a long-term tenant that's going to move in for 12 months at a time, rent that property, and create the cash flow that we desire with real estate investing. And that's great, right? It can be a great strategy. I've done rentals over the years. Sometimes I still do rentals, but my strategy right now, which I prefer, is to fully furnish these properties and rent them out on websites and search engines like Airbnb.com, Booking.com, VRBO.com, Furnish Finder. These are all different websites where you can rent out a fully furnished property and rent it out short term. Some people will come in for a minimum of 2 nights, some people for a week, and sometimes we get lucky and we get people that come in for 2 weeks, 3 weeks, or a month or two, right? And by doing a fully furnished rental, typically we can get 2.5 to 3.5 times more monthly rent than we could get from a long-term rental. And that's because we're essentially running a business out of the house. It's more like a hotel. We're taking what's traditionally a very passive investment, because long-term renters, you don't really have to deal with much, into a very active investment with turnovers, with cleanings, with basically running a hotel out of these little houses. But the reward is that you're going to get way more cash flow. The other thing I love about the short-term rental business is that we get to get our eyes on the property every week in between guests. We get to send our handyman over there and our cleaning crew over there to clean the property, make sure the air filters are changed, and make sure that the touch-ups and things in the house is always in tip-top shape, right? So that's the rent strategy within the BRRRR method. Once you have the property generating income, what you get to do is we get to refinance that property. So after the property has been renovated and then it's been rented out for some time, the next step is to refinance the mortgage. So you're either going to be refinancing if you have paid your own money to purchase that property, or maybe you bought the house with a private investor, or maybe you used a line of credit or a home equity line of credit. However you funded that deal, whether it's private money, hard money. And if you need help with any of those types of strategies, reach out, because I've got some resources that I can share with you on that as well. But after we get the property rented, we want to refinance it and pull back as much of the cash that we invested in that property as possible. Now, you remember, we make our money when we buy. So the cheaper we purchase that house in the beginning, the better. The more the house appraises for when we refinance, the better. Because typically when you're doing a cash out refinance, or you're refinancing to do a rate and term to pay off the existing private money or hard money that you borrowed, you can borrow up to 75, sometimes 80% loan to value, right? So for example, if you used 80 when you purchased it, renovated it, and it appraises for 100, well, now you can actually refinance for the whole 80 and get all of your money back. If you paid 70 and you can only borrow 80, well, you're going to have 10 stuck in the property, right? Or if you paid 90 and you refinanced and only got 80, then you're going to have that 10,000 stuck in the property, or that 10%, however you want to look at it. But that's what we want to do. The goal is to buy as far below market value as possible. And then when you refinance, whether it's 6 months or 12 months from now, and borrow as much as the bank will allow you to borrow, and you're essentially going to get most of your investment capital back during that refinance. And then the final R for the BRRRR method is you repeat the strategy, right? You repeat. You buy a house, renovate it, rent it, refinance, repeat. Buy, renovate, refinance, repeat. And one house at a time. You continue adding to your real estate investment portfolio, one property at a time. Okay. And you just keep repeating that process over and over and over again. And before you know it, like me, you'll have a $10 million empire worth of real estate that you've accumulated over the years. And then you'll get to a point where you realize that, hey, some of these houses aren't getting the best return on investment. I can sell it and cash out my equity and move that equity into some bigger, more advanced profit products, right? You can go into a multifamily. You can go into joint ventures with other people. You can do a syndication with others. You can invest in investment opportunities where you become the passive investor, right? Because what I've been told was a lie. Passive income is a lie. Everything that I just described to you is not passive income. It's active income. This is work that we get to do to generate residual income. We buy the house once, we rent it out, and we're going to get paid residually, but it's not passive because we have to manage the property. We have to manage the tenants. We have to manage the Airbnb, or we have to manage whoever's managing the property for us if you outsource that to somebody else. So it's a very active income. It might be residual, meaning that it comes every month until you sell that asset, but it's not passive. To be a passive real estate investor, you need to create chunks of cash that you have available to invest in other people's deals, where you put up the money and you get a return on your investment by doing none of the work. Your job is to send the wire and make sure that the paperwork is done right to protect your interest, and make sure that you're working with somebody that knows what they're doing, like me, who can actually get out there and get deals done. Get with somebody that's got 15, 20 years worth of experience, right? So we turn those properties into passive income once we sell them, and move those profits into bigger deals, other people's deals, partner with other people, and everything in between. So I hope that this email, this message, and this video explains to you and takes out all of the mystery behind the BRRRR method and exactly what it takes to be successful as a real estate investor, accumulating one property at a time. So if you like this video, or even if you don't, give me a comment. Let me know what you think. Let me know what topics I can cover next for you. Give me some questions. Share this with a friend or a family member, somebody that you think would take advantage of these and would like to learn from me as well. Okay, so share, like, comment. If you don't like, give me a thumbs up. If you like it, give me a thumbs up. If you don't like it, give me a thumbs down. And hey, I'm going to bumble and fumble on my words. I'm not a professional speaker, but my job is to inspire you to take action. My job is to tell you that you too can achieve financial freedom through real estate investing. And it starts with one thing. It starts with a desire, and then it starts with persistent, continuous action. Take action. Believe in yourself. Believe in these methods and these strategies. Reach out, set up a call with me. Let's have a one-on-one strategy session to see how we can work together, and if we're a fit to even work together. As you can tell from my newsletters, I'm completely clear, right? I'm just a guy that got started. I had a dream when I was 17 years old that I was going to start investing in real estate. And here I am, 43 years young, and I wouldn't change a thing. The only thing I would change is that I would have got mentorship and I would have got help sooner, because there are people out there, whether it's me or somebody else. Find a mentor, find a coach, find somebody that's already doing what it is that you want to achieve, so they can help shorten your learning curve, and you can enter the market where they're at and their knowledge and understanding, and you can shorten the mistakes. But don't be afraid to fail, right? Do not be afraid to fail, because I learn more from my failures than I do from my successes. And if you're afraid to fail, you'll never start. You'll never take action, right? I heard a mentor of mine once said, take fast action. Fail forward fast, because every failure is one step closer to the success that you want to achieve. And I believe in you, because if you're here and if you've made it this far, you are an action taker. And I know that you have what it takes, and you'll do whatever it takes to succeed. So let's go out there, let's flip some houses, and I'll catch you on the flip side. Thanks for watching. Go out there and make it a great day.